This week on Follow the Money Radio, with the value of the U.S. dollar tumbling by more than 10% year to date, and the U.S. national debt officially topping $20 trillion for the first time in history, I'll share 7 signs that reveal much more downside lies ahead for the world's leading currency. And later, Tom Cloud shares why he believes silver prices could reach $19 by the end of this year. And in response to a listener question, financial advisor Mike Mitchell reveals the best income stream that you can create for your retirement. My name is Jerry Robinson. I'm a Christian economist and an investor with the heart of a teacher. So hop aboard and buckle up, because the train is departing the station. All right, friends. Welcome to you all around the world. So grateful to have you here on Follow the Money Radio. We're going to be talking about something interesting today because, as you well know, and maybe you heard, maybe you didn't hear, the mainstream press hasn't really been doing a fantastic job of covering most of the perilous issues that are facing us here in America and the world, for that matter. But right now, this week, we are now staring at a national debt that is $20 trillion. $20 trillion. That is simply astonishing. You know, the national debt goes back in history. We've had a national debt since 1791 here in the United States, and the only U.S. president to ever pay off the national debt was Andrew Jackson. But we have had a national debt, of course, for a very long time, and it's been something that is even enshrined in the Constitution. It is a constitutional right for the government to have public debt, and it's just part of the deal. So we're allowed to use the full faith and credit of the federal government to borrow to take care of the things that we want to take care of here in the United States. The problem is that in our era of buy now, pay later, this mentality has led to a unbelievable explosion in the federal debt, state debt, local debt, and of course, not just at the government level, even individuals. Student loan debts are outrageous and above $1 trillion. Credit card debt is outrageous. Mortgage debt, all of them at many, either at or near all-time highs. So today what I want to talk to you about are 7 signs that we see the writing on the wall for the U.S. dollar. These are 7 signs the U.S. dollar really is doomed in the long run. Now, I know many people have said that the U.S. dollar is going to crash, and oftentimes these individuals will even give dates that go along with it. So it's easy to be confused when you hear people talking about the dollar, because you hear all of these other things that come along with it. One of my favorite conspiracy theories I've heard over the years is that the dollar is going to crash and there's going to be a global currency reset, and all of us who are in debt are finally going to be out of debt. Well, sadly, that's a financial plan for the dumb, right? So dumb people have a financial plan, and it's not planning, it's not saving, it's not investing, it's not none of the above. Their financial plan is a global currency reset where they don't have to do anything. There's no hard labor involved. All they have to do is wait for the dollar to crash, and then suddenly their financial plight is better. Maybe they feel as if maybe then the playing field will be leveled, and then suddenly somehow they won't be, at the bottom of the totem pole, so to speak. It's a sad way to live. It's a sad way to think. So the global currency reset that we've heard about 2011, 2012, 2013, 2014, on and on and on and on and on. Look, we are dealing right now with a U.S. dollar that is globally used. It is dominant around the globe. Okay, so the dollar is still the primary currency in the world. It is, in many ways, the one world currency, if you will, in the fact that almost every nation, friends, every nation, with the exception of very few. We're talking North Korea, Venezuela, in Iran, and just a few others, the ones, the axis of evil, the ones that we want to go take out. Except for those few nations, everybody uses the dollar. Everybody uses the dollar. China uses the dollar. Russia uses the dollar. Now, Are they trying to cut back their usage of the U.S. dollar? Yes, but they're finding it increasingly difficult because most people are very willing to use the dollar to settle their trade. So one of the things that we've had to constantly combat here at Follow the Money are the questions we receive based upon these loony armchair economists and these loony blogs that are out there with headlines that'll scare the bejesus out of you, but there's no facts involved. So when we say that the dollar is doomed, I'm not saying that it's going to crash tomorrow. I'm not saying there's going to be a global currency reset next month and you'll finally be free of your debt. I'm not saying any of this nonsense. Here's what I'm saying to you. I'm saying that the U.S. dollar is going to be destroyed, and it's going to be destroyed due to its own weight. The U.S. dollar cannot survive in the long run for several reasons, namely among them the fact that no fiat currency in the world has ever survived the long run. Anybody still using the Roman denarii? I don't think so. Anybody still using the Greek drachma? I don't think so. Anybody using the old ancient Egyptian coins? I don't think so. Right? So currencies come and currencies go. Empires rise, empires fall. Kingdoms come, kingdoms go. We all get that. And so as we look at the U.S. dollar, we see that there are tremendous weights weighing it down. What are these weights? Let's talk about 7 signs here that we are facing a big problem with the U.S. dollar. First of all, as we mentioned at the outset, the United States national debt has surpassed $20 trillion underneath President Trump. He signed the new debt ceiling increase into law just a few days ago, and on that date, immediately, the national debt, which was suppressed and being held through extraordinary measures by the U.S. Treasury below the $20 trillion mark, leapt over $300 billion in a moment as it went up above $20 trillion for the very first time in history. So the national debt is a problem. Now, why is the national debt a problem for the dollar? You may say, well, that doesn't make sense. Why is the national debt pressure on the dollar? Well, in reality, our ability to borrow more money helps continue our present economic system, which is based upon the dollar. So if we cannot continue to borrow, or if the borrowing gets completely out of hand, then we are going to have and face issues with our currency. And we've already begun to see that in many different ways as countries have been pointing out the fact that we have been racking up a whole lot of debt. There's no doubt about it. And remember, it's very, very important as you think about the U.S. dollar, not to think in terms of Republican and Democrat. One of the things that I teach our members as well is the importance of detaching yourself from these political games in your mind as you think about economics. Remember, it's not Republicans and Democrats that are going to decide whether or not the U.S. dollar should survive or crash. It's going to be our creditors who make that decision. And they're not Republicans, and they're not Democrats, and they don't care about your liberalism. Well, here's what they care about. They care about their return on their money, and that's the only thing they care about. And if you're going to provide a return on their money, then they're happy to loan you money. And if you're not going to return their money, they don't care what your political persuasion is. They don't care what you think about this and that. They just want their money. And so when we have $20 trillion of national debt, which is by and large the largest national debt in currency that any nation on the face of the planet has ever faced, that's a problem, right? So if I say to you, I have $2 million in credit card debt, and every year my output is about 1.5 million, right? How much do you think a creditor is going to be sizing me up? He's going to say, you've got a lot of debt, buddy. And so think about creditors when you think about the U.S. dollar. Don't think about politics. So number one, you have the U.S. national debt surpassing $20 trillion. That's a tremendous, tremendous amount of debt. Number two, as I mentioned a while ago, we just recently heard that Donald Trump was working with the Democrats, the Senate Democrats, to eliminate the debt ceiling for good, right? So the debt ceiling has been in place since 1917. Why was the debt ceiling put in place in the very beginning? Well, it's because individuals during World War I did not want the president's power to be able to borrow and all of this to get out of hand. They did not want the president and the Congress to go hog wild in the middle of World War I, so they put a debt ceiling limit on it. You know what it's like? It's like placing speed bumps in a school zone, right? Why do you put speed bumps in a school zone? Well, because you don't want people rip-roaring through the streets at 70 miles an hour, right? You want to remind them, the driver that there's small children walking around, and the speed bumps serve as a quick reminder, right? Oh, I got to slow down for the speed bump. Well, that's exactly what the debt ceiling serves as. It's like a speed bump for drunken politicians ready to spend your money. And of course, Donald Trump and the Senate Democrats now calling for the repeal of the national debt ceiling. Just getting rid of the debt ceiling. Just saying that, you know what? We don't even need to even worry about speed bumps in the school zone. You can trust us. Well, look, here in Washington, you can trust us. We're going to spend your money, and you don't need to have any kind of constraint on us, right? And so where are the people rising up and saying this is nonsense? Well, you're not hearing it from Fox News, are you? You're not hearing it from InfoWars, are you? Where are the people who are really standing up and saying, why are you repealing the debt ceiling? Why would you do that when we're $20 trillion in national debt? You see, friends, in many ways, people move according to politics. And so the debt ceiling is really shouldn't be raised whenever a Democrat is in office. That's what a Republican thinks. But when a Republican president is in office, raise the debt ceiling and blacktop the roads while you're at it. Nobody cares, right? So it's a really bad, disastrous thing. And so remember now, taking off your Republican hat, taking off your Democrat hat, imagine you're a creditor to the United States, and the United States says, you know what we decided? Our $20 trillion national debt just doesn't seem high enough. We're just going to take away the entire debt ceiling itself so that we don't have any accountability at all. Well, what are you thinking about as a creditor when you hear that? So these are kinds of signs that indicate that our creditors may be getting tired of our shenanigans. So number two, the growing talk of repealing the debt ceiling, which we may see as early as December. December 8th is when they have to renegotiate the debt ceiling. That's when it expires again. So we'll have another debate coming up in December unless they are able to finally banish it from our political system. Okay, so that's number two. Number three, the stock market is at an all-time high right now. If you haven't noticed, the stock market has been roaring higher. Everybody's fat and happy, and most importantly, complacent. We're in the midst of the second longest running and third largest stock market rally in U.S. history. The longest running stock market rally, by the way, was from 1987, from the time whenever Alan Greenspan took over the Federal Reserve and began his Greenspan doctrine, where basically you slash rates to every perceived problem economically. And from 1987 all the way out to 2000, we had a 13, 14-year bull market that was just unreal. Of course, it ended in the disastrous dot-com bubble and the ensuing crash. There were only two other stronger rallies, by the way, in U.S. history as we look back. From 1932 to 97, as the U.S. revived after the Great Depression, there was a tremendous amount of money made. There was a strong rally, and guys like Gerald Loeb and many others, even to a certain extent Jesse Livermore, and some of these popular traders, cashed in on that run. But then also we have the bull market that spanned from 1990 to 2000. That was also a stronger rally than what we've seen. So this is the third largest stock market rally in U.S. history. We may see this rally surpass those other two. We may see the market crash as we move forward. But driving the market gains today is a belief on Wall Street that Trump has the magic touch. Indeed, Trump has bragged incessantly about how much the stock market has surged during his time in office. And so perhaps more so than most, Trump has a vested interest in maintaining America's illusion of wealth. And certainly, friends, we do see all around us, if we have eyes to see, we see an illusion of wealth. Now, why is the U.S. stock market being at an all-time high a problem for the U.S. dollar? Well, because things move in cycles. And so the market cannot continue to go higher forever, right? The idea of perpetual growth is not true. It's not possible. It has to eventually course correct. So we all move according to cycles. Biology moves according to cycles. Mankind has his own circadian rhythm. He has his own cycles. As we look at the market, we see cycles. So cycles are just simply part of our world. We see cycles in the heavens. We see cycles on the earth. We see cycles in science. It's everywhere. So we are going to see a market cycle that eventually breaks down, right? The market will not keep going up forever. And so therefore, that could compound our $20 trillion national debt. It could compound the fact that creditors are worried about the fact that we don't have a debt ceiling anymore. And, of course, you know, the stock market also is a barometer of people's faith in the overall economy. So with it being at an all-time high, you know, we are facing downside pressure, and that will put pressure, of course, on the United States economy. Okay, so number 4, as I had mentioned, the illusion of wealth. Number 4 reason or sign that the U.S. dollar is in trouble is the fact that America's total net worth today is more illusion than reality. It's very important for you to grasp this. It's not that America's real estate and its industrial and technological and human resources don't carry tremendous value. They do. There's tremendous value to all the things that we have accomplished here in the United States. But that value is not static, and it doesn't carry a permanent price tag. The value of America's wealth in total dollar figures is instead relative to its position within the global economy. So in America's case, it's the world's leading economic power, and it controls the largest amount of total wealth in world history. And so that's interesting. But also, sadly, there's another truth, and that is that much of the wealth that Americans enjoy today is leveraged. While it's true that no other nation or today or in history, no matter how great or grand, has ever derived more benefits from its own economic hegemony than the United States, it's equally true that no nation in world history has ever been as deeply indebted as the United States. When you drive down the road and you see brand new cars on the highway, how many of those do you think are paid for in cash? How much money do you think is owed? When you drive through a neighborhood and you see houses, how many of those do you think are actually paid for in cash? How much debt surrounds you? Therefore, much of what we see is an illusion, and the amount of the money that we have in the system determines the price value. Let me give you one real quick example before we move on to number 5. And that is that if you live in an economy, let's say we live on an island and we have $1,000 in that economy. Well, how much can everything cost on that island? Well, everything must cost less than $1,000, right? It'd be impossible to charge $1,100 for a house in an economy in this little island we're talking about in our scenario that only has $1,000 in total money. Well, the amount of money that you put in the system determines the price levels of things within that same system. So because the United States has pumped so much money into its economy, it allows the price levels to rise. So are houses really worth $300,000? Yes, they are, based upon the amount of money that's in our system. But as that money either goes down or goes up in totality, as we see more dollars put into the economy or less dollars put into the economy, the price levels will also be affected. So in other words, don't think that everything that you see around you has to continue going up in price. That is only a function of the fact that money is being pushed into the system, helping raise those price levels. If the amount of money in the system eventually comes down, which has to occur, then we will see a plummeting in the price levels of all different types of assets. It doesn't mean they're less valuable. It doesn't mean that they don't still have value. It simply means that their price is correcting based upon the amount of money in the system. All right, so there's number 4. We really do live with an illusion of wealth that's not reality. Number 5 is related to the Fed. If you have been paying attention, you'll notice that the Fed is meeting this week to discuss the unwinding of their historic $4.2 trillion portfolio in mortgage bonds and in government treasuries. Now, the central bank is expected this week to announce how it's going to begin ridding itself of this massive balance sheet that it began buying bonds back in 2008. Remember, it launched its bond buying campaign back in 2008 with its QE1 at the very depth of the financial crisis. And at the time, its balance sheet, the Federal Reserve's balance sheet, was less than $1 trillion. It was $900 billion. Well, that's since swelled to well over $4 trillion. I think now it's sitting at about $4.2 trillion. Now, when you look at the actual numbers, you'll notice that the Fed, although it stopped buying bonds aggressively in 2014, it continues to reinvest the proceeds of every bond that matures. And so in essence, it just continues to create this demand. But right now, it owns nearly $2 trillion in mortgage bonds, which is around 30% of the market. And it owns around $2.4 trillion in U.S. Treasuries, which is 17% of the total Treasury market. I mean, that's a tremendous amount of U.S. Treasuries that the Fed has bought. So when the Fed begins to sell those by not letting those mature, or selling them when they mature, not reinvesting the proceeds, who's going to buy those treasuries? Who is going to buy the bonds that the Fed is letting lapse and is no longer buying? That's a big question. Think about in Washington how Donald Trump has talked about starting a trade war with China. And many people are excited about that. We need to stick it to China. Well, if we stick it to China, who's going to buy our bonds, right? Because they, in many ways, are the ones propping up our illusion of wealth. So again, we are facing a problem now as the Fed moves into a tightening scenario. So U.S. dollar, as we have a $20 trillion national debt, as our U.S. dollar has tanked 10% so far year to date, as our stock market is at an all-time high, as we're talking in Washington about repealing the debt ceiling completely, we are also hearing now that the Fed is going to begin tightening. It's a very dangerous time right now, economically speaking. Other central banks are watching how the Fed is going to pull this off because the ECB has to do the same thing. The Bank of Japan has to do the same thing. They've way over-leveraged themselves by buying bonds like the Fed did. So that's number 5. I mean, we have a Fed that is beginning to tighten, and though that is supposed to be good for the U.S. dollar, technically, it could also spiral into a very bad situation if it's not handled perfectly. And I mean literally perfectly, because the market will punish the Fed if it steps out of its bounds. Number 6, we have, if you don't know, we have an entitlement generation that is leaning on the federal government. And we believe that the entitlement generation today is going to demand even more benefits in the future. It's been one of the problems with Obamacare that many people say, well, we just need to repeal Obamacare. Well, good luck, because once you give an entitlement to the people of the United States, history tells us that it's very difficult to take it back. Imagine trying to get rid of Social Security today, right? And I know people say, I don't want to think about that as an entitlement. I paid into that. I get it. I'm not trying to call you a moocher because you receive Social Security. I'm not saying that. But what I'm saying is that those are still called entitlements, whether we like it or not. And imagine that being taken away. Imagine Medicare being taken away, right? Well, it's quite the opposite today. Now we have guys like Bernie Sanders, Senator Bernie Sanders, who is putting forth the idea of Medicare for all. Medicare for all. Now, again, it's so important that you don't think about this from a Republican or a Democratic stance for a moment. Forget that. Forget what you think about Medicare for all, whether you think it's great or whether you think it's terrible. Think about it as if you're loaning money to the government who's coming up with this idea. You're China, and you hear that the United States wants to give health care to all of its citizens while it has a $20 trillion national debt, while it's getting rid of its debt ceiling, while its stock market is at an all-time high, right? You just go down the list and you start thinking, is this really what our creditor wants to hear? So remember, creditors are watching and listening to what's happening here in the United States. But when we think about overall entitlements, this is why Aristotle, if you go back to ancient Greece, of course, Aristotle lived in a time of democracy, a kind of a different form of democracy that we live in today. But he despised democracy. And in fact, he believed that democracy was the recipe for allowing the poor masses of society to pillage the well-heeled rich elites, or the aristocrats, if you will, of society. And so Aristotle was strongly against democracy and warned against it, saying that it was the most destructive of all forms of government. James Madison, one of our founding fathers here in America, echoed Aristotle, warning against the effects of direct democracy, saying that basically the poor could vote themselves the wealth of the rich, right, through democracy. So that's why we don't have a direct democracy here in the United States. We have a democratic republic where, it's not the same as a straight-up direct democracy. But here's the point. Here's the takeaway. Our entitlement generation is growing. It's not getting less. And the appetite for entitlements is growing. And again, forget the political side equation of it. It doesn't matter if it's right or wrong from a Republican or Democratic idea. That's not the point. The point is who's going to loan us money to live this way? That's the question. Okay, so that's number 6. Let's move to the final one, and I'm going to bring on Tom Cloud. He has an update on gold and silver. I want to get to him right after this. Let me tell you number 7. Number 7 is the 7th reason, or the 7th sign on the U.S. dollar facing big trouble ahead, is the natural evolution of the global economy. It's hard for people to understand that things don't always stay the way that they have. It's difficult for some people to understand that things change, things evolve, things move. As China grows, and if it is able to successfully manage its growth, and that's a big question mark, its currency will become more credible, and it will become more widely available as a settlement option in global trade. So the yuan is growing in credibility, and it's growing in its spread around the world for global trade. Likewise, the euro is too. Remember when the euro hit the street back in 2002? It took a little time for the world economy to adjust and properly value the euro. For many years, the U.S. dollar has reigned supreme with few challengers, but that's changing today. We have the euro, we have the yuan, we have the ruble to a certain extent. It's certainly not posing as big of a threat as the yuan, but we have other players rising up on the world stage. And so it's the evolution of the global economy, right? When we think about it, no world power lasts forever. Kingdoms come, kingdoms go, empires rise, empires fall. The United States is an empire. Its currency is the U.S. dollar. It has forced the usage of the U.S. dollar upon the world economy through the barrel of a gun. This is known as the petrodollar system. You can read about that on our website at ftmdaily.com/petrodollar. We will not continue forever in our current place of hegemony. That is what we know from 6,000 years of man's written history. We know this, that no nation can continue forever. We also know that no currency can last forever because none ever has, except, of course, for gold, which is a currency. It is a form of money, no matter what the governments today have to say about it. So you know what they say, the bigger they are, the harder they fall. So in America's case, of being the largest world empire ever known, the largest world economy that's ever been, the largest debt that's ever known in world history. In our case, our fall is going to be great. The question is, are you ready for when the stuff hits the fan? Are you prepared? If you're looking for financial wisdom, I want to encourage you to go to our website, ftmdaily.com/5 levels, and start going through our 5 levels of financial freedom. Do you have savings? Do you have your savings diversified? Do you have access to precious metals? Do you have a plan to replace your income in the event that you lose your job? These are the kinds of questions that you can ask yourself that will actually make a difference. Don't worry so much about the day-to-day so-called news that comes out about how this politician said this and this politician said that. That's all fine and dandy. But if you don't have a plan, that's meaningless to you. You need to have a plan that you can protect yourself in the event that this stuff happens on our watch, right? Because it's going to happen. The dollar is going to crash. The United States economy is going to give way to another economy. And if it happens on our watch, you better hope you're ready. And we want to help you be ready. ftmdaily.com/5 levels. Let's head over right now to our good friend Tom Cloud. He's here with an update. He's been on vacation for a while in Europe. He's back now with an update on gold, silver, and the U.S. dollar.
This week's precious metals market update. We'll just get into a couple things. The trends are still so positive for gold and silver, even though we've seen some volatility. They're still both up double digit this year, so they're doing fantastic. But basically on the silver side, I had the opportunity, our person we're affiliated with in Singapore has just reported that the top silver timer there predicted last week when silver was 18 that it would pull back to $17 this week, and that would be the lowest we would ever see it again. And I got a text on that Monday morning, because I recorded this on Tuesday, the 19th of September, that they had confirmation that the bottom was in, and they're expecting silver to go to at least $19 by the end of the year, and possibly much higher. So even though silver's been on the move all year, it's had a lot of ups and downs and around, but it looks like, and while that's important, what timers say with great track records, what's more important, what is going on here at home. Politically, I mean, it's hard to believe that Trump is not going to cut spending. He's going to raise spending in his compromise with the Democrats. It's hard to believe they're not going to debate the debt ceiling. The Republicans have been so good to say we can't kick the debt down the road to the next generation. We need to do something about it now. Now, Trump has made a deal and has raised the debt ceiling more than Obama ever raised it, $1.25 trillion, 25% more than Obama did, and there's no relief in sight. Even his own Congressional Budget Office says he'll accumulate over $6 trillion in debt over the next 8 years, and most experts believe it'll be over 4 years. So we've got problems in continuing to print money and create it, and the dollar is in a long-term downtrend. Being in Europe for 2 weeks and being back for 2 weeks, I'm telling you, the trend is so set that the dollar's going down. And what goes up when dollar goes down? The gold and silver markets. Just look this week, in 2 days this week, gold has dropped off about $30 and silver about 50 cents. And every other currency in the world is celebrating the dollar's rally because gold and silver have gone down in their currency. But we're still going to be the one that ends up on the short end of it. You have got to realize if you're betting on the dollar going down and you're not betting in gold and silver, you're making a serious mistake for part of your portfolio. We're certainly not talking about all of it. And then along comes what the Mexican government is doing. They may bring back the Libertad silver coin as real money. The peso has even been much worse than the dollar. It's gone down 93% against the dollar over the last 3 decades. So now they're talking about making the Libertad silver coin and having it tied to silver to where their currency is backed by silver for the ones that buy that. And certainly with the Libertad production, it couldn't go very far. I mean, it would send silver. Another reason you're going to see silver go up is going to be that. And now we see China more and more saying, yeah, we're definitely going to have cryptocurrency in our everyday banking, and it will be backed by gold and silver, or at least gold, I should say. Now, they hadn't said silver, the word silver yet. But just think, we're sitting here as we know of 4 cryptocurrencies that are being developed that'll be backed by gold and silver. There's probably many, many more that I haven't heard about. And yet, we're sitting here acting like the banking system is not in for a shock. If the banks worldwide do not join the cryptocurrency movement by the first quarter of next year, you can start shorting bank stocks because they're going to have nowhere to go but down no matter what's going on in the economy. And then certainly we cannot go without mentioning the Hurricane Harvey in Texas and Hurricane Irma that came through Florida and Georgia and South Carolina, and the damage there and what that's going to do to the economy. It's incredible what it's going to do to the economy. Once again, we're going to have to print money. They're saying Irma is at least $160 billion. The government's going to put up 75% of that through where it's been declared disaster areas. And where I live in Georgia, the state's going to pick up the other 25%. But where does this money come from? It's printed. It's more money printed. It devalues the dollar. And we sit in here, rumors all the time. 2 important rumors I want to leave you with. One is that China and or Japan will liquidate their 1,400 billion in China's case, in Japan's case, and 1,250 billion of U.S. treasuries in China. And once they have everything in place, that is liquidated, and we can't sell our debt now. Interest rates are rising in the debt market. Nobody wants it. They know what is happening. So what happens when they liquidate and nobody buys it is at the end of the dollar, as we've talked about many times, the dollar is still the only currency in the history of civilization that hasn't gone completely belly up, and it will, without question. So I'll leave you with that thought of thinking what happens if they do that, and then I'll leave you with a thought, if billions of dollars leave the banking account worldwide and move into cryptocurrency-backed gold and silver, and the gold has to be purchased in many tons, future hundreds of tons, thousands of tons, what's it going to do to the physical gold price? Not the futures market. So my conclusion is that I believe the people that helped make gold go from 256 in the year 2000 to 1900 in 2012, once again, 256, 2012, we've now seen gold go from 19 down to 1,320, wherever it is right now. And the same people, meaning Goldman Sachs, JP Morgan, major players that have been short in the market since 2012 will move to at worst neutral and probably go long gold and silver. Then they'll be making money in the physical market as well as the futures market. That to me is going to happen, and I'm not the only one who's that, and I believe it's going to happen this year. I don't believe they can wait any longer to go long and hope to make a killing in the futures market as well as watch their price of gold and silver go up in the physical market. So hopefully, I've been off for a while. It's back. We've had a lot of the hurricane, 2 weeks vacation, plus a little work, but we're back. And if you have any questions, you can reach us at 800-247-2812. That's 800-247-2812. If you're not on our blast list, you can go to the FTM Daily /gold and sign up. We don't share your email address with anybody. It's completely confidential. So once again, give Dan or Kathleen and I a call. We'll happy to go over this with you, but the time is now for precious metals. And while there are no guarantees in the investment world, I feel gold and silver will be substantially higher between now and at the end of the first quarter of 2018. With this week's Precious Metals Market Update, this is Tom Cloud signing out.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years' experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. Hey friends, Jerry Robinson here from Follow the Money. Are you ready to learn how to trade the financial markets? Or are you ready to take your current trading to the next level? I want to show you how to trade stocks, commodities, currencies, and options for consistent profits. If you're ready to learn, I'm ready to teach you. In fact, we have created a very powerful trading software and education system that provides you with entry and exit signals on every US-based ETF and stock. Our powerful system allows you to identify the current trend in any US-based ETF or stock with high probability entry and exit ideas. You can use our software on any device, and you'll also get access to ongoing live trading coaching videos. Whether you're a complete newbie to trading or whether you're an experienced trader, you'll love our live video coaching calls held every Tuesday and Friday morning during the live market hours. In addition to ongoing training through our videos, you'll also receive our best trading ideas every evening in our nightly trading report, in which you can log into our website and check out the latest uptrends and downtrends, along with many other high probability trading ideas generated by our system. A lot of people already know how to trade, but they just need a coach. They need someone to help them along. And if that's you, you have found, I believe, the right solution in our trading software and education system. And right now, we are running a very special deal for 7-day free trial for our entire trading system. Try out our system. See if it's right for you. Complete, unlimited, and unrestricted access to everything. Simply go to ftmdaily.com/pro and sign up. Choose either monthly or annual and get started today. ftmdaily.com/pro.
Good morning, everybody. This is Mike Mitchell with Strategic Wealth Partners and Christian Advisor Referrals. And at least it's morning where we are, and I hope wherever you're at, you're having a very good day. I wanted to take today as an opportunity to just discuss a question that we got from one of our listeners here in Arkansas. This is from Janice in Benton, Arkansas, and she asked this question: Michael, when it comes to my retirement income, what is the best source of income that I should try to achieve? My recommendation to that question is there's basically three characteristics of an income source that you want to put in place for your retirement. The first characteristic is you want an income that you cannot outlive. There are many different products and many different strategies that you can establish that achieve that goal. The second characteristic that you want an income source that will continue to grow in and during your retirement to help keep pace with inflation. Again, there are many different approaches to that, different product sources that you can look at that deliver that particular need. Finally, the third area or the third recommendation of an income source I would recommend to you would be to have an income source that delivers tax-free dollars to you during your retirement years. Now, I have a lot of people that I talk to and they go, Mike, is that possible? And the answer is yes. There are different products, different sources of income, different strategies that you can put together that will actually deliver tax-free dollars to you during your retirement years. And to that end, I would like to help you discover what those are. So what I'm going to ask you to do is to make a note of our new toll-free number, and that number is 833-370-0777. Once again, that's 833-370-0777. Give us a call and let us help you to determine what are some of the best choices you can make to help create a sound retirement.
All right, friends, I want to surely tell you that Mike Mitchell has been a part of our Christian Advisor referral for many years now. He, again, can be reached at 833-370-0777. It doesn't matter if you're wanting to do retirement planning or you need life insurance or you want disability insurance, any of those kinds of things Mike can help you with. Maybe you've got questions about it. Feel free to give him a call. He's part of our Christian Advisor referral. And if you just want to fill out a form and have somebody contact you, you don't want to pick up the phone and call anybody, just go to our website, ftmdaily.com/advice. There you can fill out the free form. It's a secure form, and we will get someone in touch with you within a few business days. All right, friends. Well, that brings us to the end of our program. So grateful to have you right here each and every week on Follow the Money Radio. And as always, I want to leave you with a final word. This time, just simply a thought. You know what manners, morals, respect, and character all have in common? They're things that money can't buy. But there are people so poor that the only thing that they have is money. And that's just something to think about. Remember, when you want the truth, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
Information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of ftmdaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.